Today, we're diving into a really bold economic blueprint from investor Cathie Wood. We're talking about a vision for the future that's built on 5 game-changing technologies, a huge shakeup in the stock market, and honestly, a challenge to the entire system of who gets to invest in the next big thing.
So, let's just jump right in with the big one. Cathie Wood isn't just predicting a pretty good economy, she's talking about a boom that would more than double the growth rate we've gotten used to for over 100 years. We're talking 7%, or maybe even more. And the first thing you have to ask is, how on earth is that even possible?
Well, to even begin to wrap our heads around that, we've actually got to look back in time. You see, this entire argument is built on the idea that, hey, we've seen this movie before. And just look at the scale of this. For centuries, growth was just crawling along at less than 1%. Then, bam, in the late 1800s, 3 foundational technologies, the telephone, electricity, and the internal combustion engine, all show up at the same time. And the result? A 5-fold jump in the average growth rate to 3%, a level that's basically held strong for a century. This is the blueprint, right? A few key innovations coming together can totally reshape the entire economy.
Okay, so that last massive jump was driven by 3 big platforms. The core of this new argument is that for the first time in over a century, we're right on the edge of a similar, but maybe even bigger, technological revolution.
So, what are these magical engines that are going to drive this new economy? According to this thesis, it's not 1 or 2 breakthroughs. We're talking about 5 massive platforms all hitting their stride at the exact same moment. And here they are: robotics, energy storage, AI, blockchain, and multiomic sequencing, which, just a fancy way of saying advanced genomics that gives us this incredible, deep understanding of biology. Now, any one of these is a world-changing field on its own, but here's the real kicker. They're not staying in their own lanes. They're starting to merge, to converge, and that is where the real explosive potential is hiding.
And this brings us to the secret sauce of this whole framework: convergence. And this isn't just simple math, like 1 + 1 = 2. No, this is multiplication. It's when one technology's growth curve feeds into another one. And you don't just get steady growth, you get an explosion.
Let's make this super simple. Think about an autonomous taxi. It's not just a robotics thing, it's the convergence of robotics for the actual car, right? Advanced energy storage for the batteries, and of course, powerful artificial intelligence to be the brain. You have 3 totally separate S-curves all feeding each other to create a brand new, revolutionary industry. This is the pattern that this thesis sees happening again and again across the economy.
All right, so if the whole economy is about to get this massive upgrade, what in the world does that mean for the stock market? Well, the prediction here is just as dramatic. A huge rotation of money is on its way.
I love this analogy she uses to describe the tension in the market right now. For years, all the money has been piling into just a handful of massive, safe-feeling tech companies, while the next wave of real innovators has kind of been left behind. And that tension, she argues, is about to snap. And you can literally see that tension right here in the numbers. In the last 5 years, while the biggest names in tech, the so-called magnificent stocks, tripled in value, a whole basket of disruptive innovation stocks, they barely moved. Everyone ran to what they thought was safe, and it created this massive gap. And here's the forecast for what happens when that rubber band finally snaps back. The prediction is a complete 180, a total trend reversal. While today's market leaders might start to slow down, the disruptive innovation space is projected to deliver compound annual returns of over 40%. That's the snap.
Now let's zoom in on probably the most high-profile, most talked-about part of this whole thesis, Bitcoin. It's really the perfect case study for how this framework just thinks about value in a completely different way. Yep, you're seeing that right. The official bull case price target for a single Bitcoin is $1.5 million. It's a number that's definitely designed to get your attention, and it absolutely does.
Now, it's so easy to just look at a number like that and dismiss it, right? That's crazy, pulled out of thin air. But the valuation isn't just a wild guess. There's actually a specific financial theory behind it.
It all comes from applying something called modern portfolio theory, which, is basically a fancy way of trying to find the perfect recipe of assets in a portfolio to get the absolute best returns for a certain amount of risk. The analysis just asks, what is the optimal amount of Bitcoin to have in a portfolio? That $1.5 million number is the bull case based on that work. And get this, the math even suggests a theoretical max of 3.8 million. It just shows you the scale of this thinking.
And it's not just Bitcoin. This whole convergence idea is exactly how the thesis values a company like Tesla, too. It's not seen as just a car company. Nope. It's a robotics company, an energy storage company, and an AI company all rolled into one. And you have to see it that way to really get the valuation.
So this brings us to the final, and maybe the most important piece of this whole puzzle. If this amazing future is coming, who actually gets to participate? Who gets to build wealth from it? Well, right now, our financial system is kind of like a private club with a gatekeeper. And check out the guest list. Only about 6% of the US population even qualifies as an accredited investor. That gives him special access to invest in private, early-stage companies, which means 94% of us are left on the outside looking in.
This really creates a two-lane highway for investing. As you can see, getting access to the ground floor of innovation isn't based on how much you know or how passionate you are. It's based on a wealth test. Most people can only get in on the action much, much later, after a company goes public, and a lot of that explosive growth might already be in the rearview mirror.
And this quote just hits the nail on the head, doesn't it? It captures that frustration perfectly. Everyday people can be the biggest believers in a new technology, use it every single day, but they're legally blocked from investing in its success. I mean, you can go bet on a sports game, you can buy a lottery ticket, but you can't invest in the private company whose product you absolutely love.
And that really leads us to the final, provocative question this whole idea raises. This argument challenges the very foundation of our financial system. If innovation is what's going to drive all the future wealth, should access to it really be determined by how much money you have today? Or should it be based on knowledge, on understanding, maybe even just a simple test? It's a fundamental question about fairness, about opportunity, and about who gets to build wealth in the economy of tomorrow.